Martin from the Philippines. We're here in Real Talk Lifeline. So, in this quick live, welcome to the Money series. And the title of this one is called Types of Income. So, this is a very recent post I saw from Financial Simplified. So, getting to the point, there are three types of income. Anyone would like to guess? Hints on the screen. So, I'll be sharing my screen over here and I'll go through them one by one. So, very recent. Boom. So, let me hide this, fix screen so you see it much better. So, three types of income. Let's learn the difference. And I'll be sharing also a decade of experience as a financial consultant. So, I started my work as a financial consultant November 18, 2014. So, it's going on 12 years already. So, getting to the topic, the first type of income is called active income. So, there are three: active, portfolio, and passive. Number one, active income. This is money that we earn by working. So, the most common is having a salary as an employee. So, you get paid every month 15, 30, 10, 25 for those who know this, right? Sometimes, if you're contractual, you get paid even more frequently. So salary, it's fixed every month, so we earn. Second year is freelancing. So if you're self-employed like myself, let's say you're a life insurance agent, financial consultant, real estate agent, um, a doctor, like a professional like that, the way we earn is through a professional fee or a commission. So common thing with active income is if we have no output, we have no production, we have no sales, then we have no commission, right? The last one here is business operation. So business meaning again, when we have a business, if we don't work, we have no activity, then we have no income. So the second type of income is called portfolio income. And this one, I'll differentiate the two, especially between portfolio income and the last one called passive income. So what's the difference? Active income, we're used to that. Um, Probably the most common type of income we're taught since we were born, right? So portfolio income, this is now coming into the world of investments. So you hear words like capital gains, like that. So I'll focus on this one. And the main differentiating factor, I'll explain in a bit, is this. So when I became a financial consultant in 2014, the most common type of portfolio income I would see are equity funds, growth funds, bond funds, money market funds. So for those who are also familiar with, let's say, banks, they offer UITFs, unit investment trust funds, or other corporations. They offer mutual funds, very similar, right, in the portfolio. So these are investments that can go positive or negative, but you only realize the gains or the losses upon redemption. So I'll give you two real world examples of this. So these are clients of mine. December 2014, a client puts a placement of 1 million pesos, again, Philippine pesos. And then, ever since 2014 to this day, guess what the fund value is now? So I just checked it before going on this live. It's May 14, 2026 today. So the fund value is at 770,000 pesos. So some of you might react, Martin, it's been more than 10 years. It's like 11, 12 years. And then the 1 million can actually go below 1 million. So the short answer is yes. Second example, another client, 2015, put in a placement of 5 million pesos. I just checked the fund right before going live. The fund is now at 3.4 million. So people who are wondering what's going on like that. And then, just so you know, again, out of all being professional, with my clients, I was surprised in a good way that these sophisticated and experienced clients, they're actually not the ones complaining to me. It's because they understand these types of investments that they can go negative also. Now, here's the key: if you redeem it, you try to withdraw it or surrender, then that's the only time your portfolio becomes negative. So please keep that in mind. These sophisticated or experienced investors understand terms like benchmark, entry point, exit strategy. So they understand what they're getting into. Now, what's the point of portfolio income? Because you're like, Martin, that sounds so unappealing. Now, portfolio income is normally used for building a huge nest egg, like growth stocks, real estate, and even nowadays crypto. So that usually takes a long time to grow, but it can give high potential return. Now, when I say a long time, more than 10 years, as you can see, 10 years, it goes through the economic and market cycles. It's normally used to build for retirement. So we're looking at 20, 30-year plus time horizons. And this can also be used to build generational wealth. So portfolio income does have a use. The last one, passive income. So this is money that I'll explain how this works because I learned this more recently, only in the past few years, maybe around 6, 7 years, getting my hands into it. So these are investments, very simply, that give payouts, whether it's quarterly. So I'm putting this because that's what I experienced first, like a cash flow fund. It can give monthly. So let's say you get a global multi asset income fund, like managed by BlackRock. It can give annually. So that's pretty common, or sometimes semi annually. So that's the least common that I see. Now, other similar terms for the word payout can be dividends, annuity, interest, coupon, like that. So the key is that these payouts are they're paid out to you in cash or to your settlement bank account. So it's not rolled over like in portfolio income, meaning you actually get cash paid out to you that you could use now. So this provides cash flow for you in real time, and you don't need to wait until the maturity date, like 10 years from now or longer, or you don't have to wait for the redemption in the very end because your capital or your principal is still intact. When you need cash flow, a golden goose to pay for your daily desired lifestyle expenses, then build this passive income. So some examples you see here could be from real estate. You could use that rental income that's normally monthly. You can get creative. You can even get passive income from royalties. And most commonly, I see are dividends. These are from stocks, REITs, real estate investment trusts, very similar investments designed like that. So, in closing, I'll give a bonus to you guys: financial freedom. So, this is a lesson I learned related to passive income. Financial freedom equals passive income greater than your monthly or annual expenses. So, I'll repeat that one last time. Financial freedom happens when your passive income is equal to or greater than your life expenses. So, I'll go back to you guys. This was a quick one on types of income. I hope you learned something new, the difference, especially of portfolio and passive income. Thank you. I love you. And I will see you next time.